This video is going to cover Cisco. They just announced their earnings and I wanted to record a video. This is a stock I recently started to buy. I just saw a lot of value there for one of the historic pioneers in technology. Way back when the internet was being built, Cisco was the company that was red hot. Their routers helped build the internet and they continue to be a leader in networking. They've diversified away from networking. They do other things around security and other aspects of technology. Overall, I still think Cisco is a real powerhouse. Although they're an older technology company, they really have a strong presence in networking and continue to drive free cash flow. The company has had a rough year and the stock was really sold off. So it provided a nice opportunity to come in and buy the stock at what I felt was a discounted price. They're expected to grow a little bit based on their earnings announcement. They're going to grow a couple percentage points. And if they can exceed that, look out. I think Cisco stocks are really going to go places. Let's take a look at their fundamentals. I'll do a valuation of Cisco, share that with you, and come to a conclusion with sharing with you what I am going to do with this stock going forward. So Cisco is a large cap company at $182 billion in market cap. After today, they should be closer to $200 billion since their stock is up 6.29% in after hours. It's a large revenue company, $55 billion in revenue, and they pay a nice dividend, 3.5% dividend from a technology company. The PE is at 15, forward PE is even lower at 13, so it looks pretty attractive. Analysts consider that it's a good buy and it's discounted by 23%. Over the past month, the stock is down 4%, but if you include that 6.31%, I guess you could say they're in the green for the past month. For the year to date, they're down 10%. For the past year, they're down 15%. So this stock hasn't been going anywhere. Meanwhile, technology's just been really rallying. So Cisco's really missed out of this technology run that we've been in for 2 years. We look at their financials, their revenue has been growing. They haven't been setting any records, but the growth has been there. And they're expecting to grow from the current fiscal year that just ended, fiscal year 2024, and fiscal year 2025 should be maybe 3 to 5% growth in that year. So overall, the company is growing. That's good to see. And they are driving free cash flow. Free cash flow is one of the principal methods that I use to value the company. And you can see that they have consistently driven free cash flow. Free cash flow was really good in 23. It's gone down a bit. And as you'll see in my valuation, I'm going to use a lower number just to bring down my risk in this investment. Overall, the forecast, we have 17 analysts cover this stock, so it's very well covered. There's one analyst that's really optimistic with a price target of $76 per share. I hope he's right. But on average, they're saying, hey, it's discounted by 23%. Not bad. When we look at their earnings per share, the earnings per share is $3.78, and it's going to be fairly consistent, not anything aggressively growing, but it's going to be nice and stable, growing in the middle single digit percentage amounts. So I'll use that in my valuation that I use for earnings per share valuations. So I did a valuation of Cisco using their free cash flows and then valuing the company based on the free cash flows I expect they're going to produce. I also value the company using their earnings per share. I combine the two. I put more weight in the free cash flow method. I just believe that that's a truer measure of value. And I get to about a 30% discount on the stock. And that's using the most current stock price, the after hours stock price that has been trading on. So that's a pretty nice discount on a company I think is got a lot of potential to continue to rise. It is an established company that is beginning to grow, and especially around security, that could really be a catalyst for the company to grow. Their cash flows, I'm going with a more conservative forecast than maybe other analysts are using. I'm starting with the most current financials, full year minus free cash flow minus the CapEx, and then growing that modestly by 6% for the first 4 years. Then after that, grow up 4%. The net present value is $223 billion. Add cash, take away debt to get to an equity value of $210 billion. Market cap, this is an estimate using the after hours stock price, is going to be $193 and some change billion. So they're almost fairly priced when it comes to free cash flows, a little bit of a premium, but it's in earnings per share that this is a very suppressed stock. And if they begin to grow, this is in the right space, good margins. I believe they really deserve more of a 22 PE. And that's what really drives a nice 71% discount. So when I blend the two, I get a 30% discount because I put more weight in that free cash flow valuation method. So how valuable and desirable do I think Cisco is? Well, let me go through that and give you my thought process through this decision. So I like companies in the green quadrant, in my desirability quadrant. These are companies that have strong barriers of entry to keep competitors out. They drive high growth, high margins, high free cash flow. And Cisco at one time was most definitely in the green. They've got more competition in networking and have somewhat eroded their moat to some extent. I'm going to put Cisco with a slight, slice of their business in the green, but most of it in the gray. I think they have a lot of relationships, especially with both domestic and foreign governments, where that really help them sell. I think their credibility is really high. I think their security business can really ramp up, especially now that CrowdStrike really, really screwed up in the last 3 months. So I'm going to put Cisco there. It's important for me to get a discount on Cisco, and it's important for me to see that Cisco continues to strengthen their barrier of entry and really become stronger and stronger over time. Overall, I like the company. I think their products are really good. I think the company is a good one. I think their balance sheet's very good. They have almost as much cash as they do debt. They can pay off 60, 70% of it, and they drive a lot of EBITDA. So they can really safely pay off all debt if they wanted to. They just acquired a business and they're pretty much digesting it, getting it off their balance sheet. And that's a really strong sign of a good balance sheet. So I like company balance sheet, and I like the discount at 30%. So I'm going to continue to buy shares of Cisco and really load up on this stock. It's a company that pays a nice dividend, so nice income coming through from this stock, nice discount. And I think the best is yet to come for Cisco going forward. So that's my video on Cisco. Hope you found it interesting. Just remember, I'm just an individual investor. Just share my experience with you. I'm not providing any financial advice. I'm not recommending that you buy, hold, or sell Cisco. Please make your decisions on your investing independent of this video. With that, let me wish you the best success in 2024. And thanks again for watching.